Hey everyone, and welcome. Today we're diving deep into a name you probably know, Urban Company. They're gearing up for a big IPO, and the big question is, should you be paying attention? Let's break it down.
Okay, let's be real. We've all had that moment of panic, right? The AC dies on the hottest day of the year or a pipe starts leaking at midnight. And then comes the desperate search for a plumber who'll actually show up. It's a total nightmare.
So, what if you could just tap an app for that? That's the genius behind Urban Company. They basically took the Swiggy or Uber model, that on-demand convenience we're all used to, and pointed it straight at our home service problems.
So what are they exactly? At its core, Urban Company is a huge online marketplace. It's the middleman, the tech platform that connects you and me with trained pros for, well, just about anything. We're talking cleaners, electricians, beauticians, you name it, all coming right to your doorstep. All right, so with an IPO on the horizon, there's a lot of buzz. To really get why, let's start with the bull case. This is the exciting part, the story of their explosive growth and why a lot of people are betting big on them. First, let's talk money. Check out this number, 34%. That's their compound annual growth rate for revenue. In simple terms, their sales have been growing by an average of 34% every single year since FY23. That is seriously fast, consistent growth.
But, getting new customers is one thing. The real magic is getting them to stick around. And wow, do they stick around. In FY25, a whopping 82% of their users were repeat customers. People aren't just using it once, they're hooked. For a platform business, that is pure gold.
And just to give you a sense of the scale we're dealing with, we're talking over 7 million people using the app every year. This isn't some small startup anymore. It's a massive mainstream platform. So how do they keep this growth engine running? It all comes down to a super powerful concept called the network effect. Think about it. The more of us using the app, the more work there is for top-notch professionals, so they join. And with more pros on the platform, we get more services and faster bookings, which, you guessed it, brings in even more users. It's this beautiful, self-feeding loop of growth. And then there's this, the number that made everyone sit up and take notice. After burning through cash for years, they posted a net profit of 240 crore rupees in FY25. That looks like a huge, incredible turnaround, right? The final piece of the puzzle for a perfect growth story? Or maybe not so fast.
Okay, so now it's time for a reality check. We've heard the good stuff, but every story has two sides. And when you start peeling back the layers here, the bear case, the argument against investing, has some pretty serious red flags you absolutely need to know about.
So remember that 240 crore profit we just talked about? Well, here's the catch. When you look closer, a huge piece of that, 211 crores to be exact, wasn't actually profit from their business. It was a one-time tax credit. Their actual operating profit, just 28 crores. Now, hey, profit is profit, but that's a very different story from the headline number, isn't it?
And that profit surprise is really just the tip of the iceberg. There are 4 other big worries we need to dig into. The whole gig worker debate, the threat of competition, the IPO's price tag, and some major operational headaches. First up, this is a big one, the gig worker problem. Right now, Urban Company calls its professionals partners or independent contractors. This is great for their bottom line because it means lower costs. But what if regulators force them to reclassify these folks as employees? Suddenly, you're talking about huge new costs, benefits, retirement funds, the whole 9 yards. That could completely change their financial picture. Next, there's a risk that's baked into this kind of business. It's called disintermediation, which is a fancy word for being cut out of the deal. Imagine this. You find an amazing plumber through the app. They do a fantastic job. Next time you need them, why go through the app again? You've got their number now. You can just call them directly. You save a bit, they get paid more, and Urban Company, they get zero. That's a huge threat. And then we have to talk about the price. The IPO is valuing the company at around 12 times its sales. Now, as this market analyst notes, that's pretty steep. The worry is that the valuation is stretched, meaning the price might already be so high that there's not much room for it to grow once it hits the market. And finally, let's look under the hood at how the business actually runs. And there are 2 numbers here that are frankly a little scary. First, their partner attrition rate is 45%.
That means almost half of their service professionals quit the platform every year. Think about that. And because of that, they have to spend a ton of money, 27% of their revenue, just to find and train replacements. That kind of churn is a massive, expensive drag on the business.
So there you have it. On one side, you've got this incredible growth story. On the other, some really serious risks. So what's the verdict? How do you weigh all this? Let's put it all side by side.
Okay, so this is the investor's dilemma, right? In the promise column, you have everything to love. Insane revenue growth, crazy high customer loyalty, and a huge market that's barely been touched. But then you look at the perils column, and you see a profit number that's not what it seems, a huge regulatory cloud hanging over them with the gig worker issue, and a valuation that's already sky high. It is the classic battle, huge potential versus huge risk. All right, let's boil this all down to the absolute key takeaways for you. Number 1, Urban Company is the leader of the pack, no question, and their growth is impressive. Number 2, that shiny profit number has a giant asterisk next to it thanks to that tax credit. Number 3, the risks we talked about, the gig worker status, the high valuation, they are not small issues. They are fundamental. And all of this leads to the one big question you have to ask yourself.
So, what is Urban Company really? Is it a revolutionary tech company that's about to completely dominate a massive industry? Or is it a high-risk gamble with some pretty deep fundamental flaws in its business model? Honestly, how you answer that question is everything.
And that's our deep dive on the Urban Company IPO. Hope you found this breakdown useful. If you did, do us a favor and hit that like button. And of course, subscribe for more explainers just like this one. Thanks so much for watching.